Hello everybody, welcome back to my channel. So today I'm going to bring you a very special video. I was going over the content on my channel, and by far the most popular video that I've ever posted in my YouTube since I've been going for about 3 years now was a video called the #1 volume profile rule, which you should definitely check out. It's a pretty in-depth 1-hour video, and I'm gonna link it on the top of the screen now. But I decided that video is all about 2 years old, and I wanted to make a new 2024 updated version and also make it just a little bit shorter and just more to the point. Okay, if you follow me, you know that I am a huge fan of volume profile. For me, it is the best trading tool in my arsenal for all kinds of trading on any time frames on any market. Okay, and I go into a lot of different strategies in my courses, but I wanted to make this video to share because by far this strategy, this rule that we're going to talk about in this video, I think is the most valuable basic concept that you should know and apply when you are using volume profile on your trading. Okay, so first let's just do a very quick recap of what the principles of volume profile are. I have several videos on this. You can search them in my channel for more in-depth, but basically we're just going to talk about the parts of what the volume profile is. Okay, so as you can see here, I made a diagram here. This is Euro US dollar chart, but again, doesn't really matter. This applies to any market, so for now just ignore. This could be any market on any time frame that we are watching. And so down here, this is what we typically, most people know as volume in trading, which is measured on the price, on the time and date scale on the x-axis. And what this does is it's measuring the buying and selling volume activity based on time. So for example, this candlestick right here, this will be the corresponding volume candle for that within this 4-hour period, since we are in a 4-hour time frame. Okay, with volume profile, instead of looking at volume versus time, we're going to be looking at volume versus price. So you can see it is based on the X price axis, and then is going to be based on price and on volume activity. So here on the left side, you can see that we have this gray outline here. This will be the volume profile that's measuring from this point all the way to the end of the chart here. Within this, we have what is called the value area, which you can see here is shaded in a little darker shade of gray. This value area, a lot of platforms by default are going to put it as the 70% of the traded volume. I like to use 68% because it's more accurate. This is all based on a bell curve distribution of probability. So as you can see, here's the mean, and then we have one deviation to either side. Each deviation is 34.1%. So if you add those up, that will be 68.2, but I just use 68%, okay? But if you use 68 or 70, the difference is very minimal. But basically, what this is telling us is that this area right here, from this candle to the end candle, 68% of all the volumes that were traded were within this price ranges that we have right here. Okay, so that is the value area. And then the top of this is going to be called the value area high, the top edge. The bottom edge is going to be called the value area low. And then the point with the most volume traded out of the entire profile here is going to be called the point of control. So this is the price level. As you can see, we had a lot of trading activity there. We built up a lot of volumes, and that's why the profile is sticking out so much here. That's going to be a point of control. Now, these areas that are sticking out here are going to be what's called the high volume nodes. So basically, anytime we see the market sort of accumulating or trading sideways or just trading a lot through the same area, then it's going to start pushing the profile out. So all these little areas that are sticking out are going to be high volume nodes, and obviously, as you can see, some are going to be bigger than others depending on the amount of accumulation that we have in those areas. Each high volume node is going to have its own little point of control. So this is the point of control here, this is the point of control here, this is the point of control here, basically the point that is sticking out the most. And then the opposite of high volume nodes is going to be low volume nodes. And these are areas where you can see on the profile that we have a drop in the volume activity. These areas means two things. Either that we have quick and large and significant rejections from those areas, or we just traded very quickly through there. So like you can see right here, this candle just went down really fast, and then we've rejected several times, so very little volume was built up here. Okay, so the low volume nodes coincide with areas of support and resistance, and that's why the rule we're going to talk about has to do with specifically the edges of high volume nodes. Okay, that's going to be the main point that we're going to talk about in this video. So let's start off with the number one long rule when it comes to volume profile trading. Okay, in a bullish structure, meaning if we're putting a bullish trend or an uptrend, you want to be longing the bottoms of the high volume nodes when price pulls back into them. Okay, so let's say we have, you know, a bunch of some price activity on the left here. We apply a volume profile. Again, this can be on any time frame, or this can even be on an intraday chart, like a low time frame chart for day trading, etc. So we put in a profile, and we can see we have a high volume node here. Okay, so when market starts coming in an uptrend, we're making higher highs, higher lows. Whenever you see price accepting within this high volume node and we're pulling back into the bottom of it, this is where you want to be looking for longs. This is going to give you the highest probability trades when you're looking to trade to the upside using volume profile. As you can see here, we have two scenarios of where you could take a trade. You would go in on this pullback, let's say, and then your invalidation is going to go right below the low volume node area underneath the edge of the high volume node. Okay, and the nice thing with this is also that it's going to give you a very tight risk reward, because what happens, for example, if you see market going up and you start chasing and you get in right here, well, if you get in right here, your stop loss probably should go below the swing low, but then you have the top edge of the node here. So you can see this is pretty much a one-to-one risk to reward trade. Also, the middle areas of the high volume nodes, meaning the points of control, these are areas where price tends to get sticky and choppy. When a market is like ranging, that's because it's building a lot of a large high volume node, and price is going to tend to mean revert to back into the center of the high volume node. So that is why getting in around the middle area of a high volume node is not advised, because you will most likely just get chopped up, okay? But then as you can see, if we wait for a pullback, we can have our entry with a tight stop just beyond the low volume node protection. And then as far as targets, we have two. First target is always going to be back into the point of control, the area with the most traded volumes, and then will be the top edge of the node. Now, of course, this could break out and continue up, but there's always a risk that you're going to get a significant rejection on the top edge of the node, at least a pullback. So the best strategy is going to be take profits here, and then if we have another node here and we break above, same thing, rinse and repeat. You just come and you look to get in on a bullish structure at the bottom of the high volume node, okay? So now let's go look at two examples of this, of the long strategy. We're going to look at one on the higher time frame here on TradingView, and then we're going to look at a day trading example on Sierra chart. And so you can see right here, I have a volume profile that I started right here, and I stopped it right here, okay? I'm stopping it here just because, you know, obviously as the market is moving and printing candles, this volume profile is dynamic. It's going to be changing, and the high volume nodes are going to be shifting, etc. So if we stop it right here, you can see we're doing a pullback now. We had this trend line, we broke out, we've shifted market structure up. So now what are we doing? On this pullback here, we know this is a very significant low. And if we look at the profile, you can see we do have some low volume node areas, but in general, we have one big high volume node right here, okay? So then I'm focusing immediately on these two areas right on the edge here. We could also look at this one too. If this would have come down even further, then we would be looking over here. But as you can see, the market came down. We did wick through here, and you can see we actually hit the point of control of this little node here, which is a common target to have, to look for point of control targets. But then you can see we came down and we could not close beyond this low volume node area. And then we came back several times and we got some nice bounces, okay? So if you're day trading and you look at this area here, you could see that this would have provided you with several opportunities to take longs right here. And you know that you have a clear invalidation, you know, coming either, well, in this case, I would put it right here, just beyond this little node on this low volume node area. You can have that area as your stop, and then, you know, you just take profits for your next logical targets. In this case, just looking at this, I would say probably, you know, this area would have been the most logical to take profits. You can see support broken, and then we're looking just for a fill of this gap into here. Okay, so that's one example. Now let's go into Sierra chart and look at an example. This is the E-mini S&P market. This is a 3000 tick chart, which is what I like to use when I'm day trading here. And all these profiles that we have here are session volume profiles, meaning this is regular trading hours, 9:30 to 5 p.m. or well, to 4 p.m. stock market hours. And then these ones in blue are extended trading hours from 6 p.m. until 9:30 the next day. Okay, and so you can see each session profile has its own value area, point of control, notes, etc. And you can see on this day, we had a very bearish start to the day. We had this pullback here, broke down, and then here right around 11:30, right around the Europe close, market started stabilizing, trading sideways, and then here we start shifting structure, making higher highs, higher lows. And then here, this is the key point. Let me make this thicker. This is the key point that I want to show you now on this. As you can see, this profile is developing as the day goes. That's also one of the reasons I like to trade the last 2 hours of the sessions, because that way the session profile is already pretty well developed. But what can we see around this area? Around 47.80s, we had support, support, broken, resistance, resistance. So we immediately know that this is of an important support resistance area. And then what happens right here? We have this push up, break this highs, shifting structure up, and then we have this little pullback here, and then we just go from there. And you can see we have this high volume node here. We accept back into this price areas, into this little node. We pull back, have a nice little retest, and then the market just goes from there. Okay, so in this case, you could have put your stop probably just beyond the lows here from this, right beyond this low volume node area right here, and even below the point of control here. So you can have your invalidation, look for a pullback here, and you can just ride it, maybe target first this area. Well, you have VWAP, and you can see also on VWAP here how there's a second opportunity on this little node as well. VWAP is giving us some resistance. You can see we had support broken, but then right here, same thing again, rinse and repeat. We push up, break this high. Now we're inside of this high volume node area, pull back and retest VWAP as well, and then we just keep going. Okay, so that's pretty much the basic principle of the long rule for the volume profile trading. Again, when price is accepting back into a high volume node in an uptrend, look to get in near the bottom of the high volume node. Okay, so that is the bullish long rule. And now let's go look at the bearish rule, which is going to be exactly the same but in reverse. So if we have a market that is coming in a downtrend, and in this case we have a profile that is showing us a high volume node here, once price accepts back inside of this node, we're looking for pullbacks to the top area to short. Okay, so downtrend, we're looking to go in short at the top of high volume nodes. And the same concept, you have your entry here, your stop loss just beyond the low volume node resistance, and then your risk to rewards, you would have your entries here, stops there, and then first area to look for targets, or at least just to monitor your trades in case of any reversions against you, is the point of control, and then again targeting the bottom edge of the high volume node. Okay, so basically the same concept we talked about in reverse. That's going to be the number one short rule. And if we go up here, let me zoom out, and here we're looking at an example on the NASDAQ market on the 1 hour time frame. So this will be good either for a swing trade, or if you're day trading, then you can zoom out to the 1 hour, plot your long-term profile, look for your node edges, form out all your areas and game plans. This is exactly the process that I do on the market analysis videos that I share on YouTube and for my own prep when I'm getting ready for my own day trading. And you can see right here, we had this market that made this high in September. Then we had many weeks here of downtrend. We got down over here. We're making this profile is going from here all the way to here. Okay, so let's assume we're trading this day here on September 23rd, and we have this plotted out. So immediately, what do you see? A big high volume node with a very nice edge, very big low volume node area right here, and then another huge high volume node. And then obviously you can see a swing low here, very impulsive breakdown as well. So this is going to be a potential area to fill. So in this case, we have the node. We can see we already rejected. We keep breaking market structure down. We pull back, and this is the area to short. And you can see we had 3 straight rejections from this same area. Now, could this have broken through? Of course, this could have happened. If that would have happened, then we look to turn this resistance into support, and I will be targeting the bottom edge of this node into this. But odds are that we're going to have, if not a significant rejection, at least some kind of correction near the top edge when we're coming from a bearish market structure. Okay, and then if we just push forward, you can see eventually we did come here, market gapped up right here, a big impulsive move, and we broke this highs, and then we impulse move, gap down, and then eventually we did fill in over here. And then just going back to the long rule, you can actually see that the long rule applied right here as well. We shifted structure to the upside, and look what happened here. Right at the bottom edge of this high volume node, we broke up, retested, and then we pushed up, okay? And we came right into this highs, okay? So you can see how when we shifted, now we change our focus. Okay, now I want to long the bottom edges of the high volume nodes. And then to finish, let's go into a Sierra chart example on a 5-minute chart. This is again NASDAQ on a 5-minute chart. And you can see right here, we had a daily, the regular trading hours, very bullish session. We did have this very big breakdown right at the end on the last trading hour, which did break these lows. So we did shift market structure right at the end of the day after a big impulsive day. We left several local high volume nodes, as you can see. And then what happens? We opened up right here on the extended trading hours on the night Asia session. And you can see we just sort of drifted like sideways, pretty much right around this bottom area of this node and these lows here. Not a lot going on as usual in the first hours of the day, very low volatility. But then you can see right here later on, we picked up, we pushed up right into the top edge of this. You have the resistance from the day session as well. And then right here, this would have been a great entry to go short. And in this case, by this point, none of this would be here because this had not developed yet. We would only have the profile up to this point in the night session. But you can see then we will be using the previous session as our guide. And you can see how we came right into this edge. And this gave us a nice shorting opportunity. Our stop could have been like right around here, right beyond the low volume node area. and then we could have targeted right here back to the point of control and VWAP, for example. Okay, so that is another example of how in a downtrend, then we look for entries near the top edge. If we have the high volume node and we're in a downtrend and we come in, we look for entry short near the top edge of the high volume nodes. Okay, so that's pretty much it for the video. Hope this has been insightful. Again, this is a 2024 update of my most popular video here on YouTube. Make sure to subscribe so you don't miss out on any new content. Check out below for more information on all my trading courses if you want to learn this plus a lot more strategies and things that I use in my own day trading and swing trading strategies. And take care, and I'll see you all soon.